Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Today we're going to be talking about Bitcoin's macro price predicament, its stock to flow price predicament, and we're also going to be diving into a few on-chain analytics, specifically active addresses for Bitcoin and token circulation, among many more. And best of all, we've got the sentiment team on in that segment to just go through those aspects of on-chain analysis for us, which is fantastic. I really enjoyed that segment and I hope you enjoy this one as well later on in the video. But let's dive right into this first segment of the video where we'll be talking about Bitcoin's price action on the macro scale. Subscribe to the channel for more videos like this in the future, and let's dive right in. So Bitcoin is on the cusp of making history. It's plain and simple, because when you have a multi-month downtrend like this get breached in this fashion, it is Friday and we need to wait for that weekly candle close just like this to confirm the end of this downtrend. But this is a high probability breakout right now with only a few days left for that weekly close to come in. This macro downtrend is over, and when we tend to see higher time frame downtrends and new higher time frame uptrends begin, especially when we see reaccumulation at these highs, which has been lasting for a few months since May. Multi-month reaccumulation at these highs, bouncing about between 28 to around 55k, and of course price compression in towards the apex of this structure. And price compression tends to precede volatility. Lo and behold, we are seeing just that. And of course, when we rejected from 52,800, roughly speaking, it was immediately bought up in this area of support. And just remember, we got rebounded here. Bitcoin rebounded from this area, rejected, and then lost support here, right? But now you can see that it reclaimed it as a support here and here as well. Double support reclaim at a higher low here as well. So this lost support has been solidified with new buy interest on two separate occasions, weeks apart, and that poses extreme pressure onto this downtrending resistance, which has now been broken. History is in the making, and Bitcoin is on the cusp of confirming this history, because what this means is that Bitcoin is now breaking out from this reaccumulation structure which has been going on for many months. It's really exciting, fantastic to see that. And just tying in with a video that I posted in late May, and I'm going to talk about that video in the next video in a bit more detail, we really had extreme periods of fear at that time. Extreme fear precedes financial opportunity, and that was the first sell-off in this overall awareness phase. I think we can all agree that Bitcoin is now in a phase where whoever you talk to, really, they're going to understand roughly what Bitcoin is, or at least have heard of it. So we're no longer in this stealth phase, although you could really make a case for this stealthy takeoff lasting since the COVID pandemic, and that uninterrupted uptrend occurring from March 2020 all the way really to May. We didn't really see many corrections during this takeoff period, but now that was the ultimate bear trap, this 53% correction, and now we're recovering from this mid-cycle correction, and we are almost at those levels in May. 65k and now 55k for Bitcoin. That is a really nice recovery, and we're probably going to revisit those highs relatively soon in the coming weeks. But in any case, bear trap has happened. That shakeout for investors has taken place, and now we've got new investors coming back in on the bandwagon, apologies, and just joining this new uptrend. So we're going to be entering these phases, and of course you can see here, it's a tweet that I like to post quite often recently, that the second portion of the bull market is going to be more parabolic than the first portion, and you can see that clearly because this is the first part of the bull run, which is a stealthy takeoff, which then materializes into a bit more of an awareness phase, and then you see that bear trap And then the second part of the cycle becomes a bit more euphoric, and we tend to see new all-time highs, price discovery, fantastic momentum and euphoria, extreme greed, extreme FOMO, just breaking Bitcoin to new highs. So the second part of the cycle is preparing itself right now, and this second part of the cycle is going to be more parabolic. So because it's going to be more parabolic, if you just measure this peak to the bottom of this bear trap, notice how it's going to be much longer, or at least much shorter in time compared to the first portion of the bull market. And you can actually make a case that, well, the first portion of the bull market was twice as long as the second portion is going to be, and that's understandable. Parabolic price appreciation tends to happen quickly. FOMO, extreme euphoria, and greed take precedence in terms of investing strategy, which is why we see blow off tops later on, and trend acceleration, which far outpaces the trend acceleration that we've seen earlier on in the cycle. So just by looking at this graph, you can make a case that the second part of the cycle is going to be a little bit shorter than the first part. In fact, the first part is twice longer in time, at least, than the second part, where the second part is going to be more parabolic, shorter, but potentially even more impressive in terms of the amount of returns that we might see from Bitcoin going into price discovery. So what do we need to do to reach that price discovery? Well, we've been talking about this on the channel here. This is the major red resistance here. It's a major supply area, and Bitcoin is now trying to find itself stability at around current price levels, reaching these regions at the moment, previous support right over here. So we do have a bit of a cluster of potential resistance at around these levels. It would totally be healthy to have a dip at some point, because we've seen a $8,000 weekly candle over here on top of already a $8,000 candle preceding that, right? So Bitcoin is up $16,000 in 2 weeks. Can you imagine that? Isn't that fantastic? But it is also a testament to perhaps expecting a dip, a healthy dip at least, at some point in the future, because investors are getting a bit greedier. But make no mistake, this dip is short-term volatility. What we're talking about right now is macro trend analysis, and at some point Bitcoin is going to break beyond this major resistance right over here, potentially even soon. So what I'm going to be watching for on the daily time frame is this sideways flagging structure. It is an early stage flagging structure, so I am open to the fact that this flag could still change over time. We could see a breakout later on. Whatever the case is, we have defined levels here, daily candle close above this resistance, and we'd probably see a revisit of these red highs. But of course, need to hold this support going forward. Let's see how this bull flag resolves itself. In any case, that's the situation on Bitcoin on the daily, and the weekly we've covered, and the stock to flow model here. Just very quickly, this is a reaccumulation range like we've been talking about earlier in today's video, and you're already seeing that Bitcoin is curling up in terms of its stock to flow model, or at least in the context of the stock to flow line, which is really important. $84,500 or 80K roughly speaking is what I'm looking for that upside deviation beyond this point to take place, because that's when we're going to have to start the clock on the bull market, because a bull market peak tends to happen a few weeks after this upside deviation takes place. So once we fully resolve this reaccumulation range, which will take place upon breaking 65K, 80K, 84.5K will be the next level to watch out for that upside deviation. In any case, guys, I hope you really enjoyed this video. Subscribe to the channel for more videos like this in the future. Let's dive right into the segment where we'll be talking about active addresses, token circulation for Bitcoin, and looking at the on-chain analysis, which could truly bolster our understanding of what to expect from Bitcoin next and going forward into the future. The Sentiment team has joined me in this segment, so I'm really excited to welcome them to the channel. Let's dive right into the segment. Hope you enjoy it. Hey guys, welcome to the segment. Thank you so much for joining me. We have our friends here from Sentiment who specialize in on-chain analytics and market behavior analysis, just to give us some additional context, not only to Bitcoin's current price predicament, but also how can we utilize these on-chain metrics and various social listening and behavior analysis metrics just to give us a bit more of a perspective and understanding about what's going on in the market. We have Brian and Dino here from Sentiment. Welcome, guys, to the channel.
Great to be here.
Awesome. So, Dino, let's start with you because you have a few interesting metrics here. I'm keen to hear your thoughts. How can we utilize these in understanding Bitcoin's behavior? But first of all, what are they and why are they relevant and why are they important to help us gain an understanding in the market?
Sure. So Sentiment really is a platform that's built around three sources of information for all the cryptocurrencies that we currently have on the website. That's on-chain data, which we collect directly from the blockchains, then social media data, which is something that we are quite unique by in terms of being able to listen in on over 1,500 different crypto-related social media channels, scrape those channels, and create unique metrics that sort of show you the behavior of the crowd, specifically the crypto community, rather than the entirety of the sort of social web, and how they are responding to price movements of any coin in particular. And then finally, we also track the development activity of about 2,000 different coins to sort of try and get a gauge of how active a particular project is in terms of coding manpower, whether they're still investing resources into their project, whether they're staying true to their roadmap or not. So I think on-chain analytics is sort of starting to find its place under the sun for the last couple of years. Really, we've been, we started this project back in 2016, and at the time, on-chain data wasn't really seen as much of an interesting sort of part of the crypto data set, simply because people thought it was too noisy. And I think in general, the metrics that we have extracted from on-chain data back in 2016 were fairly rudimentary compared to what we have right now. So I think it's the biggest one of the biggest differences between traditional finance and crypto is the fact that there's this breadth and wealth of data that is freely available for anyone to tap into, that gives you very concrete insights about the behavior of different market stakeholders. Like when looking at on-chain data, you can segment that data into particular market stakeholders or holder groups. You can look into the behavior of potential retail investors, the behavior of large addresses or whales, look at the behavior of team wallets, infrastructure wallets, and as well as the flows to and from exchanges, which are also sometimes very important to figure out what is the potential amount of sell-side pressure that we might be experiencing at any point during a particular stage of the market cycle. So, I mean, all of those are extremely important. We currently have about 100 to 150 different metrics on our website. Obviously, some are more important than others, but yeah, I think on-chain data is now really starting to become a more prominent source of analysis for traders and investors, which obviously we're very happy to see.
So, Dino, what could we focus on here in terms of a metric that you find useful for analyzing Bitcoin's price action and just showcasing what is happening in that price action today?
Sure. So I think I'll start with some fairly basic metrics as far as on-chain data is concerned, and then I'll transition into our social metrics because they are the ones that have been really showing some interesting signals over the last 24 hours, which is, pretty obvious given Bitcoin's rally. So here, what I have on my screen is I'm showing the active addresses for Bitcoin over the last year of data. Essentially, for people that are unfamiliar with the metric, it's one of the most sort of basic metrics as far as on-chain data is considered. It essentially shows the amount of unique addresses that are interacting with Bitcoin on a daily basis. By interacting with, I mean sending or receiving BTC. So if I actually zoom out a little bit more, you'll see what Bitcoin's daily active addresses have looked like in the run-up to the 2021 rally. Essentially, we have had basically a period of about 12 to 18 months of a stable and sustainable growth in daily active addresses. So a lot of on-chain analysts consider active addresses to kind of be an on-chain proxy for token-related demand, right? And in general, for a proxy for network adoption and the network effect of a cryptocurrency. So in general, although there's obviously no silver bullet, what we've seen in the past is that sustainable price rallies usually coincide or go hand in hand with an uptick in on-chain activity, especially daily active addresses as well as the circulation of a coin. So first of all, I'm showing active addresses just to kind of give you an idea of what we have had in the run-up to the May correction and then what happened immediately afterwards. So as you can see, pretty much a 12-month span of a relatively slow but steady growth in terms of the amount of addresses that have been interacting with Bitcoin daily. I think they have peaked at around 1.33 million daily active addresses, which is massive. It was an all-time high at that point in time. However, immediately after the correction, I think the correction has spooked a lot of people, particularly sort of weekends and retail investors. So the general sort of trend in terms of network activity has been declined for about 2 months straight. We have had Bitcoin's daily active addresses actually drop to as low as 500,000. So that's about 65% loss over a 2-month span. Very sort of at the time, it was fairly concerning to see that so much of general network activity has evaporated on a daily basis from Bitcoin, right? Now, what we read these weekly reports where we sort of track the behavior of these and other metrics. And in general, what we have seen over the last, basically since the bottom here in late July, is a stable uptick in daily active addresses once again. So actually, over the last couple of days, we have finally been able to breach the 1 million DAA or daily active addresses mark for the first time in a while. Between January 1st and May May the 15th, really, or May 10th, I think. The amount of, on average, the amount of daily active addresses has stayed above 1 million for every day except for maybe 5 or 6 days. So basically, in the first 5 months of the 2021, there have only been 5 or 6 days when Bitcoin's daily active addresses have been less than 1 million. So we have struggled really to rebound or bounce back in terms of general network activity and network demand and coin demand for Bitcoin for a while. And so I think it is definitely a hopeful sign that we have seen Bitcoin's on-chain activity also sort of start to recover alongside Bitcoin's price action. The same thing we are seeing in terms of token circulation. So circulation is a metric that measures the amount of unique Bitcoin, units of Bitcoin, that are moving on the blockchain at any given point. So as you can see here, especially since the the bottom back in July, we have seen Bitcoin's daily circulation once again start to recover, similar to what we've seen in October and November as well, suggesting a more healthy network value transfer overall. So for example, one metric that is using or utilizing token circulation is NVT. Some people might be familiar with it. NVT essentially is a metric that divides market cap or market value of a coin by the amount of coins that are moving on the blockchain. So if the market cap is too high relative to, for example, let's say here, right? Market cap might be too high relative to the amount of value that is being transferred on the blockchain. This might suggest a bearish divergence. So it's definitely hopeful to see that in terms of just general network activity, we are seeing a consistent uptick in both the amount of BTC moving on the blockchain, suggesting new blood entering into the market once again, and the amount of addresses interacting with BTC.
Yeah,
so
and Dino, I did want to say this about both of the charts that you've shown so far on address activity and circulation. There is going to be questions about people who are wondering whether this provides alpha, whether there is a leading indication property to these charts. And the answer is absolutely yes. If you highlight that area right around, it looks like late February to late March, where we saw this dip in circulation, notice how the price was rising while circulation was falling. And until about April, the price was still able to get up to that all-time high area. And once it did, there was a big drop off. And the reason was because we weren't sustaining those utility properties, aka circulation and address activity, that we were seeing at the end of 2020 and the early part of 2021. So these are the types of bullish and bearish divergences that can really help our community in identifying where future price movement will be heading.
So that's quite interesting because we have this token circulation, we have active addresses, and the most recent past few weeks, really, we're seeing an inclining tendency in both, just supporting that price rise. Brian, I'm curious to hear your opinion. Will this sort of incline, especially when we consider active addresses, is that inclining tendency in active addresses returning to form that we saw earlier this year? Because like Dino said earlier, we were seeing an inclining tendency in active addresses until the peak of 65,000. But is this recent recovery in active addresses returning to that inclining tendency that we saw earlier this year and going back to as far as April 2020?
Yeah, from what I've seen, it's certainly encouraging that we're climbing in both address activity and circulation. We can very visually clearly see that it hasn't rebounded to the levels that we were seeing in January through April, right up until the crash, even in mid-May. Circulation looks a little better than address activity right now. There's an argument that maybe circulation is slightly more indicative of future price movement, which is why we have an NVT model, which we can show on a future call. I check on that NVT model every couple of days. And so far in October, we are seeing the first bullish divergence that we have seen since February. Now, it's a small sample size. We're only 6 full days into the month of October thus far, but it is a certain sign of a potential turning point due to just the massive increase, which happened quite suddenly, of the amount of unique tokens moving on the BTC network. And oftentimes that will happen due to this rise, right? A slow rise will continue to happen, and suddenly a lot of FOMO jumps back in. You study a lot of resistance and support levels on your channel, and a lot of times when that resistance level is broken and we start hitting those higher highs, a lot of people who had been previously dormant now decide that they are ready to jump back in and do active trading, circulate those tokens in a way that we weren't seeing back in May through August, really. And that's sort of what's happening now. But we have to see whether this is kind of a reaction to the price rise or what is causing it. And so far, my opinion is that this is a reaction to the price rise, and that has propelled the price up further. So now we're at a point where you can see just a very small retrace here at the end of that price line. How are people going to react to that? Are people going to continue circulating and try to push that price higher? Or are people now going to freeze up, and that's going to be the kind of thing that pushes us back down?
So Brian, a follow-up question to that. In terms of this circulation, because circulation can mean many things. It could be bullish circulation, that people want to be buying more coins and getting that buy support, but at the same time, perhaps they're circulating to provide some resistance and supply. So I'm just wondering, Brian, what do you think in terms of the circulation? Can the token circulation, give us an idea as to the directional bias of where the market could be going? And what would that circulation on this particular metric look like if we're going to be approaching a area of supply or resistance, for instance?
Yeah, generally any activity is somewhat good. It doesn't necessarily mean that, a bunch of whales selling off and causing a blip in address activity or circulation is a good thing, right? That would obviously be bad. We use supplemental metrics like exchange inflow or outflow to see what might be going on in the midst of these rises of circulation. And we can clearly see from what Dino just showed that the supply on exchanges is declining right now, which is a very good thing. That means the amount of Bitcoin that's available to have a massive sell-off on exchanges is much less than what it was in previous months. So there is at minimum, less of a risk of downside pressure than there would be when the supply on exchanges was high. In terms of what kind of circulation is going on, it's always changing. It's very difficult to decipher, no matter how many metrics you look at, whether this is the kind of circulation that is indicative of, things in the works behind the curtains happening to push the price to a new all-time high, or whether, it's a bunch of people at the top looking to sell off just prior to, pull the rug out from the rest of the crowd that is getting excited right now. Generally, though, because we use unique addresses and unique circulation, it, it's better than just looking at trading volume or transaction volume, because this has to include people other than whales circulating and making healthy movement within the market, which is why general increases in circulation or address activity is almost always going to be a good thing, unless we see like a very small blip or a spike that might be indicative of just many collective large addresses making moves. If it's sustained like it is now, that's generally going to be good for the price. What is not good is if there is dormancy and complacency and people waiting for others to make the next move in the markets, because utility more than anything is going to be what drives the markets regardless of what support levels or resistance levels we just hit.
Right. It's really like circulation just looks at the totality of network interaction. So that's why on Sandbase, we do try to then get more granular into the behavior of specific participants. And that's why, for example, you can also look at the things like what's going on in terms of the amount of Bitcoin moving to and from exchanges, the total supply of Bitcoin on exchanges, what's going on with long-term holders, whales. So we are really, the metrics that I started with are really sort of bird's eye view of the blockchain activity. But then obviously, I don't think it's enough by itself to tell us all about whether Bitcoin's current rally is viable or sustainable or not. For that, there's a bunch of additional indicators to tell us more about specific market stakeholders that are at the end of the day going to be key, and their behavior is going to be key to deciphering what happens next.
So on the back of that, Dino, I'm actually curious about the supply exchange, because Brian did allude to there being a declining tendency in this supply on exchanges, which is a positive thing. Investors might be moving their coins away from exchange and maybe onto their hardware wallets just for storage for the long run. Of course, as the bull run progresses and the second part of the cycle starts to take off, holding is going to be a pretty successful strategy for investors, most of them at least. So it's very good to see the sort of supply diminish from exchanges. But I'm just wondering, is this declining tendency in this supply on exchange, because we are at a very low point comparing to the time frame we're seeing here from May 6, 2020 to now, it's the lowest point. I'm wondering, should this be a cause for concern? Because things can't continue to decline. At some point, we're going to see a reversal. I'm just curious to hear your thoughts, Dino, about this declining tendency. How much could this fall? And are there any metrics to perhaps paint a richer picture in answering this particular question about supply exchange diminishing and potentially reversing at some point in the future?
Right. So I think absolutely at some point we're going to see a reversal. But I also think it's, the supply on exchanges, I think it's a natural tendency for the supply on exchanges to decline simply because, sure, Ethereum has started a DeFi movement, but there are more and more tokenized Bitcoin on Ethereum that are entering the DeFi craze. There are other use cases for Bitcoin outside of just the store of value and means of payment, or just hoarding Bitcoin on exchanges. So I think as these additional use cases progress, we are going to see, I think, a continuous reduction in the supply on exchanges. So to me, that also seems like a bullish signal. So like I said, there's really no silver bullet, nor am I trying to claim there is, but very often what we see for not just Bitcoin, but low and mid cap coins is that there seems to be a sort of a divergence between the price action of a coin and its total supply on exchanges. So the idea is, or the working hypothesis is that assuming unchanged demand, if there is a reduction in the supply of available coins, then this might help propel that particular coin's price further. So I think I am fairly not confident, but hopeful, maybe optimistic, that we are going to see a continuous decline in the supply of Bitcoin on exchanges throughout 2021, and that we might be looking into a sort of supply shock at some point in time. That being said, yeah, this is one of the reasons why I also suggest keeping an eye on these metrics on a daily basis. Also looking at not just the total supply of exchanges, but things like exchange inflow, which tracks the total amount of BTC moving daily to exchanges to see sort of whether there are short-term spikes in sell-side pressure. Because sometimes, especially during massive rallies, you will see sort of short. Like for example, it's not just for Bitcoin. If I look at something like Matic, I think is a good example. The way that you can analyze sell-side pressure. So for coins like Matic or generally any ERC20 coin, what we have is various sort of several different exchange related metrics. One metric in particular, for example, are active deposits. So deposits are addresses that are being used to funnel Matic funnel Matic to known exchange wallets, right? So what we've seen at the top here for Matic was a massive surge in the amount of daily active deposits. I think that was an all-time high for it. As well as here around this local top, we have seen a fairly significant uptick. So this suggests that even though in days prior there hasn't really been all that much general activity in terms of additional sell-side pressure, once it happens, it can coincide with short-term corrections. It doesn't necessarily need to mean that it's the end of the road, but these are the types of things that even though, for example, a supply on exchanges might drop in the long term, there are still metrics to keep an eye on to look for like short-term exit opportunities, or for example, the points at which you might want to consider reducing your exposure.
These are fantastic insights. I really appreciate you guys sharing them here in today's segment on the Rekt Capital channel. Brian, do you have any closing thoughts about what we've covered here today, and where could we find and learn more about Santiment?
Yeah, and I will preface this by saying what we're looking at right now is certainly the tip of the iceberg. One thing we can show on the next call is supply distribution, right? And seeing how these metrics that we looked at today can compare to what Dino's just briefly showing here with the tiers of addresses and how some of these millionaire tiers in particular, those just below the threshold of exchanges, are behaving with their tokens at any given time, because the 100 to 10,000 tier of addresses with that amount in their wallets will very often be leading indications of where markets are going next, and when it is in tandem with supply being moved off exchanges or circulation rising or falling, whatever the case may be. There are a lot of hints in there that we can show you guys on the next call. But in the meantime, I would definitely encourage people to try this platform out for free. I objectively feel that this is the most comprehensive platform anywhere in terms of cryptocurrency data. You can make a free account. There will be a 30-second or 30-day lag on all the metrics that we're showing you today. But if you want to open a pro account, you will get a 2-week free trial to explore everything in real time, and then make the decision as to whether you want to be a $44 per month pro member with us. We've got a great community. We've got a Discord full of very bright and insightful, unbiased people who are constantly looking at the markets, along with myself, Dino, and the rest of our staff. And we also have a promotion for anyone who wants to use the code Rekt Capital when signing up. They receive 25% off of that initial month of purchase, which is awesome, as Dino's typing here in the search bar. So that's it for me. I definitely am excited to get to know your community, Rekt, more and more as we progress with these calls. And I look forward to talking with anyone in our Discord server or anywhere else in terms of what's happening in the markets at any given time.
Yeah, one thing that we might want to show on the next call is our social metrics in particular. So actually, if people are interested, I wrote an article on Monday where I talked about Bitcoin actually before this latest pump, and in general going over a variety of our social metrics and what they were seeing. And I was actually mentioning how for the first time in a while we have seen a very strong bearish sort of bias in terms of the retail reaction and in terms of the data that we collect from crypto social media, which in the past has actually been a pretty positive sign for Bitcoin's price action. And so far, that seems to have been the case. So if you want a more sort of comprehensive glimpse into some of the social metrics that we track and how they can help you in your trading, make sure to check out our insights as well.
Awesome. Thank you so much, guys. Dino, Brian, for joining. These were fantastic insights and observations. I'll include links to the website, to Santiment down below, to the monthly report written by Dino. And of course, thank you so much, guys, for the 25% discount for the first month of Santiment, especially exclusively for Rekt Capital audience here. You guys can click in the link in the description as well to try out the platform. This is something that I'm really interested in, and I look forward to hosting you guys here on the Rekt Capital channel as we delve deeper into these on-chain insights together, and just for that better perspective of understanding when it comes to Bitcoin's price action and what it could do next. Thank you so much for joining me today, and thank you guys for watching. Stay tuned for more on-chain insights over the coming weeks. Brian and Dino will be back in the coming weeks. For today, though, thanks so much for watching. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.